Good day, students. I will be doing the 2012 November exam, and it's the similar question paper to the previous question papers that I've done videos for, and it starts with question 1, and this question paper is out of 75 marks, or it was out of 75 marks. And as you can see that we have a trial balance, and it says the trial balance of Bantry Bay Close Corporation at 31st December 2012 is given below. And as you can see that in this trial balance we have members contribution on the 1st of January 2012, and 700,000 rands is a combined amount for all the contributions that were made by the members. So that means we need to know the members' interest so that we split that 700,000 rands based on the members' interest when we do the statement of changes in equity for the closed corporation. We have retained earnings opening balance, revaluation reserves opening balance, and we also have a 10% loan that was from ABA Bank amounting to 600,000 rands. And we have SARS provisional tax payment. Remember, this is a tax that was already paid during the year amounting to 60,000 rands. And we have to check the amount of the tax expense that was supposed to be paid during the year, and we compare it with this payment to establish either we have overpaid tax that was due to SARS or we have underpaid tax that was due to SARS, so that we can be able to calculate tax due or receivable to or from SARS. We have land vehicles accumulated depreciation. Another very important line item is the allowance for credit losses, which is 15,000 rands. And if you can see that it is on the 1st of January 2012, being an opening balance. So now if this is an opening balance, that should indicate that it was an allowance that was estimated or a provision that was made last year, then it was brought to the current year, hence it's an opening balance. And normally in this transaction or in this line item, we will have to calculate the current allowance for credit losses so that we compare with this one to check if our allowance is increasing or decreasing or remaining the same. And very importantly, we have prepaid expense, which was rent on the 1st of January, and the prepaid expense was 8,000 rands. So now for this entry, we have to make a reversal because this rent by the end of last year was an asset, because we know that any prepaid expense is an asset. So now this was an asset last year, but in the current year, it has to be cancelled. Therefore, now when we cancel or when we reverse this prepaid expense of 8,000, we have to say debit rent expense, credit prepaid expense by 8,000 rands. So now it means our rent expense will have to increase by 8,000 in the current year. We have inventory members interest-free loan, and if you see we have two members interest-free loan for both members, and these amount to 120,000 rands and 140,000 rands. And both of these loans are recorded on the debit side of the trial balance. So now the minute these are recorded on the debit side of the trial balance, it tells us that these are the assets of the closed corporation. How are they the assets? They are the assets because the closed corporation gave loans to the members of the closed corporation. So now hence these are recorded on the debit side. Then we have bank, and the nominal section start with sales up to other operating and admin expenses. So now these are just the incomes and the expenses that will have to be accounted for in the income statement. So now before I go to the notes or to the adjustments, I always prefer that I should start with the requirements so that I know what is required of me before I read the notes. Requirement number 1 says prepare the rent expense account. I will definitely do that. And in the preparation of the rent account for the current year, we are required to consider note number B and the relevant accounts on the trial balance. Dates may be omitted, that is out of 4 marks. 1.2, we are required to prepare the asset disposal and the accumulated depreciation for the vehicles, and I will not do that as I highlighted that for the current year you are not tested on the asset disposal. 1.3 says consider all the relevant information and prepare the statement of comprehensive income, and this is the income statement. Therefore now I will have to do the income statement for the close corporation by the end of December 2012. And they say that we must show all the calculations in brackets, so I will do that together with you. 1.4 says consider the relevant information and prepare the statement of changes in equity of Bentley Bay Close Corporation for the year ended 31st December 2012. So now we are required here to do the statement of changes in equity for the close corporation, and I will have to do that as one of the important requirements. 1.5 required us to do the current asset section of the statement of financial position and the current liability section of the statement of financial position. That I will not do it today because you are not required to do the statement of financial position in the 2016 financial year or 2016 academic year. 1.6 says prepare the notes, and these notes is members interest-free loans and the transaction with the members. I will do those two. Then after we are required under 1.7 to do gross profit percentage and current ratio, and for this one I suppose I will be able to do, but because we are not required to do the balance sheet, therefore now I will not do those two. Then number 1.8, we are required, however ratios are still important for your exam, but I won't have enough information to complete those two ratios. 1.8, consider number J or note number J and other relevant information to do the following. Calculate the value of Bentley's 40% interest in the corporation. I think I'll do this combined with other question papers in a separate video, just the calculation of the interest. That was requirement 1.8, and I already have the statement of changes in equity for this close corporation. So now I have everything prepared for you. I'll just paste the amounts wherever I am dealing with the adjustments. So now, first thing, whenever as a student you know that you are required to do the income statement, the minute you know this is a requirement, first thing that you must do, go to your trial balance, check for your incomes and for your expenses that are already given. Then after you record in the income statement the amounts that are there. We have the amount of the sales 1,950,000 rands. So now I will record this in the income statement as they are. 1,950,000 rands. I've just recorded the rough draft of the income statement, everything that was supposed to be there after I checked in my trial balance. So my sales is 1,950,000 rands, 1,950,000 rands. Therefore now after the sales we will have the cost of sales, and the cost of sales amount to 975,000 rands. Cost of sales amount to 975,000 rands, and sales minus cost of sales will give us a gross profit of 975,000 rands. That will be the gross profit. Then after we have other incomes, and under other incomes we only have one income that you don't have to worry regarding its calculation: the profit on the disposal of an asset. The profit on the disposal of an asset is 61,000 rands. Why not to worry about this is because we will not test you in the year 2016 on the topic of asset disposal this term. We have tested you on that last term. So take that into cognizance. I've been highlighting it in the previous videos. Then after now, I have to check the wages that are in the trial balance, and the amount of the wages is 250,000 rands. Then I record that not under the total but here, because there might be an adjustment, 250,000 rands. Then we have salaries that were due to members. Salaries to members, 300,000 rands. Salaries to members is 300,000 rands. I record that with an open bracket. Then after, we also had a rent expense, and the rent expense is 96,500 rands. Rent expense is 96,500. Do we have any rent expense here? Okay, I did not make a provision for the rent expense. So a rent expense will be 96,500 rands. I just forgot that. So now let me just make a provision for the rent expense. So let me just write my rent expense. Just check for some space somewhere in between. Let me put rent expense here. Rent expense. My rent expense from the trial balance is given to be 96,500. Rent expense 96,500. Then another expense that we have is credit losses. Credit losses is 8,500. And credit losses is 8,500. Then after, we have to account for the depreciation. Depreciation, remember, once again, you will not be required to do much calculation for depreciation. So hence I also gave you that 84,000 rands for the depreciation. That is already calculated for you. Then after, we look for the next expense, which is other operating and administration expense. And for other operating and administration expense, we don't normally have an adjustment for this one. 51,500. We don't normally have adjustment for this. I can just write it other total. 51,500 rands. So now I have accounted for that. There is a finance cost. There is a finance cost, and the finance cost is the interest on the loan. There we have interest expense on a loan from ABA Bank, 55,000 rands. Interest on a loan from ABA Bank, it is sitting as 55,000 rands. That is the interest already paid during the year. Then we record that 55,000 rands there with an open bracket. Then after, we look for other expenses. Taxation expense, we will see that in the adjustment. So now from here, we can do all the adjustments and record them as they are, or as we see them fit in the income statement. So now let us go straight to the first adjustment. Okay, before this first adjustment, remember there was a prepaid expense. Yes, let me record that. There was a prepaid expense, and I told you that a prepaid expense opening balance must increase the expense in the current year. Therefore, now the rent must be increased by 8,000 rands, because we are crediting here the prepaid expense and we debit rent expense. Let me just open my note to write on whenever I need the calculations. So now in this case, when we are doing a reversal for the rent, we debit rent by 8,000 rands. and we credit prepaid rent expense. Prepaid rent by 8,000 rands. Remember, prepaid expense is an asset, so now we are cancelling the asset because this prepaid rent is no longer prepaid in the current year, because it was prepaid for the current year, and when the current year arrives, it's no longer prepaid. Under the narration, you can just say reversal of prepaid expense, reversal of prepaid, because we were reversing a prepaid rent. So now that will be a narration. That is why rent is recorded as a plus in the income statement, because in the general journal rent is debited. So now we just add that 8,000 under the rent expense, and there we have the 8,000 under the rent expense. So now let us go. There was no other expense that was there in the beginning of the year as prepaid or accrued. Then now we check, we have credit loss 8,500. We have accounted for that, just to confirm. Okay, credit loss have been accounted for 8,500 rands. So now let me go to my adjustments, and I will record my adjustment as I see them immediately. Then we have adjustment number A, which says Bentley and Bay share interest in Bentley Bay Close Corporation as follows: 60% is Bentley and Bay is 40%. Bentley contributed 50,000 rands capital on the 31st of December 2012. This transaction has not yet been recorded. So now we know that this entry will affect the statement of changes in equity. And the reason why we are given the 60% and the 40% of their interest is for us to be able to split that 700,000 rands of the capital contribution, which is 60% that was contributed, 60% and 40% by the beginning of the current year. So now that is for that key reason up to this point. Then after, we also have to record the 50,000 of the member contribution that was done by the end of the year, which is not yet recorded. So now we just have to record the 50,000 rands now in that statement, and the member who contributed, that is Bentley, contributed 50,000 rands. So now under additional capital contribution, Bentley contributed 50,000 rands, and we write that as additional member contribution. And we go to the second adjustment. Remember, this will affect the statement of changes in equity. So now there's still another portion not yet recorded. I don't want to forget that. Number B says that included in the rent expense is an amount of 8,500 for January 2013. When they are saying that included, they are trying to tell us that in the amount of rent expense, which we have seen in the trial balance to be 96,500, they say in that amount there is an amount of 8,500 that is inside that 96,500. Therefore, now it means that 96,500 has 8,500 inside it, and this 8,500 is for next year. And remember, in the income statement, we only record expenses that were supposed to be paid in the current year or in the financial year, as opposed to the one that was actually paid. So now the fact that the close corporation has actually paid 96,500, it means we have to subtract 8,500, because 8,500 is not for the current year but is for next year. So now 8,500 was not supposed to be paid in the current year because it belonged in the year 2013 and in the month of January 2013. So now for that reason, it means 8,500 must be removed out of the 96,500. So now it means when we do now record that in the income statement. We just have to say under our rent expense minus 8,500, because the 8,500 does not belong in the current accounting period, but it belongs in the next financial period. So now, with that being said, let us then do the ledger account to confirm that all the amounts that we have are accurately been recorded. So let us do a ledger account for the rent, and in doing the ledger account for the rent, we say rent expense, and remember we are doing rent expense, and under rent expense we start with the total, and the total is the one that comes from the trial balance 96,500, which is the rent of 96,500 that was already paid. Then after we record the reversal of the rent, which was a prepaid rent expense of 8,000 rands. Then we record that on the debit side. Why on the debit side? Is because we are cancelling the prepaid expense, which is an asset, and to cancel or to reverse an asset, we had to credit that asset. That is why we see that credit of the prepaid rent, and rent expense was debited by an amount of 8,000. So now this is a ledger account for rent expense. Then we have to debit our rent expense by 8,000, and the contra entry will be prepaid rent. Then on the credit side, we record 8,500, because 8,500 is this one in the adjustment. 8,500 is this 8,500, which is paid for next year. But that 8,500 is already inside 96,500. So now we are removing that prepaid rent from 96,500 so that it becomes a prepaid expense. Then we say prepaid rent on the credit side. Then we can close off this ledger account. So now we have to say 96,500 plus 8,000. 96,500 plus 8,000, that gave us 104,000. 104,500. 104,500 minus 8,500, that gave us 96,000. That gave us 96,000 is P/L, which is profit and loss. This is the amount that will be recorded in the profit and loss or in the income statement. And as you can see in the income statement, if you say 96,500 plus 8,000 minus 8,500, you should get 96,000 rands. And make sure that all those expenses are recorded in brackets. Then now we go to the next adjustment. That means we have recorded the rent entry where it was supposed to be recorded, which is the income statement in this case. So now let us go to the next adjustment, and the next adjustment is adjustment number C, and adjustment number C has to do with the disposal of the asset and the buying of the asset and the recognition of depreciation for the current year. And that one is not much necessary for you to know this time. Number D says land was revalued on the 31st of December 2012 to a fair value of 1,300,000 rands, and this revaluation has not yet been recorded. So now we have to check the value of the land in the trial balance, and the land costed the business 1 million rands in the trial balance, normally at the beginning of the year. But now in the adjustment, we are told that land was revalued at a fair value of 1,300,000 rands. So now if you say 1 million minus 1,300,000 rands, that will tell us that the land value increased by 300,000 rands. So now it means the revaluation in the current year is 300,000 rands. That means the land increased its value from 1 million by 300,000 rands to 1,300,000 rands. So now we record the revaluation of 300,000 rands in the statement of changes in equity for the closed corporation. We only record 300,000 rands under the revaluation and under the total column. So now we have recorded that. Then we go to adjustment number E, and adjustment number E is normally the same if you have seen the previous question papers that I've been doing. Included in the trade receivables is a debtor who owed a corporation 10,000 rands. So now we have a debtor, or we had a debtor that owed the closed corporation 10,000 rands. This debtor has been declared insolvent, received a check of 70 cents in the rand from his insolvent estate, and the remaining 30 cents in the rand is irrecoverable. So now, though this debtor was declared insolvent, but 70 cents, which is 70%, was received. So now if 70% was received, it definitely means that 30% will never be received or is irrecoverable. So now it means if 30% will never to be received, therefore now it means 30% is a bad debt, because a bad debt is the debtor who does not pay the amount that he was supposed to pay to the business. So now we say 10,000 times by 30%. And obviously 10,000 times by 30% will be 3,000. So now 3,000 will never, or is irrecoverable. So now if that is irrecoverable, therefore it becomes a bad debt. Therefore now we add 3,000 under our bad debt, because out of the 10,000 of the value of the debtors will never pay us back. Then now we continue with that. So we have recorded the 3,000, which is the 30%, and we know that 70% of 10,000, if you say 10,000 times by 70%, you definitely get 7,000 rands. 7,000 rands was received, and this 7,000 rands will affect bank in the statement of financial position, because cash that is received and which is not yet recorded in the business supposed to increase the bank account of the business. So now that will affect the bank in the statement of financial position, of which I am not focusing on that as per yet. So now it means, in other words, the full 10,000 rands is no longer a debtor in the business, because another portion of the 10,000 was received, which is 3,000, sorry, which is 7,000, and another portion, which is 30%, is irrecoverable. Therefore now the full amount is no longer a debtor in the business, because a bad debt is no longer a debtor. We write that out of the books, or off the books of the business. And there's always this sentence after we have accounted for the previous sentence, which tells us that the allowance for credit losses must be maintained at 10% of the outstanding debtors. So now it means we have to know our debtors before there was a bad debt. Then after, we have to subtract the bad debt and the amount that was paid, which is the full 10,000 rands. Then after, we calculate the allowance for credit losses from the outstanding trade receivables. Our trade receivables, as we can see in the trial balance, we have our account receivables in the trial balance as 210,000 rands, and these were our receivables. So now when we calculate our allowance for credit loss, allowance for bad debts, allowance for bad debts, our allowance for bad debts will be our debtors will be our debtors, and our debtors are 210,000 rands minus data written off, and the data that was written off amounted to 10,000 rands. Remember, another portion was received. It's not like the full amount was written off. Therefore, now our outstanding debtors will be 200,000 rands. So now we have removed the 10,000 rands. Therefore, now we have to multiply by the percentage to which our credit loss must be maintained at. And we were told that our credit loss must be maintained at 10%. So now we just have to say 200,000 rands times by 10%, and that will give us an amount of 20,000 rands. Therefore, now this is the new allowance. In other words, this is the new allowance for credit losses. So if this is the new allowance for credit losses, we have to check the old allowance for credit losses, the one that was an opening balance. And the old allowance for credit losses on the 1st of January was 15,000 rands. So now we have the old allowance, which come from the trial balance, and the old allowance is 15,000 rands. And the old allowance is underestimated. That means now we have to increase the old allowance by 5,000 to become 20,000 rands. So now it means the difference between the two will be 5,000 rands. So now we have to increase the old allowance by 5,000 to become 20,000 rands, because it is underestimated by 5,000 rands. So now for us to do a general journal regarding this, because doing a general entry on the allowance for credit losses is very important for you to understand. Businesses, they do estimate allowance. So now this is not a requirement, but it's very important for you to know how to do a journal entry. We debit bad debts or credit losses by an amount of 5,000, and we credit allowance for credit losses, allowance for bad debts, allowance for bad debts, and the allowance for bad debts is 5,000 rands. Remember, what we are doing in this case, we are increasing the allowance for credit loss, which is the 15,000 rands. We're increasing that by 5,000 rands so that it becomes 20,000 rands. That's what we are doing in the general entry. Also acknowledging that this is a possible bad debt, because an allowance for credit loss is the estimation that a portion of the debtors will not pay the business back. So now hence we have to record the 5,000 of the bad debt under our bad debts or credit loss in the income statement. Therefore now we just have to say plus 5,000. Then we'll just have to say 8,500 plus 3,000 and plus 5,000. That will give us 8,500 plus 3,000 plus 5,000. That gave us 16,500 rands. 16,500 rands is the total of the credit losses after the increase in the allowance for credit losses. So that will be 16,500 rands. That has to be recorded as negative. Let me just explain this to you further. It is not always the case that in the trial balance you will be given the 10% to increase the allowance. Remember, in this case you are told that we have to maintain the allowance at 10% of the outstanding debtors. Sometimes they can say the allowance for credit losses must be maintained at 20,000 rands. They can just give you the amount by which the allowance must be maintained, and obviously they will not say out of the outstanding trade receivables because it's already calculated. So now if you are given or you are told that the allowance for credit losses must be maintained at 20,000 rands. So now it means they have already calculated the allowance for you. And if they have already calculated the allowance for you, it means you just have to say, okay, this is the 20,000 rands being the new allowance. You compare that with the 15,000 rands of the allowance already in the trial balance. Then after that, you can just immediately compare the two and you record the difference, which is 5,000, and you do your general entry, which is 5,000 debit burdens and credit allowance for credit losses. I don't want you to be misled by the examples that are always similar in these previous question papers. Sometimes they can give you the 20,000 of the allowance already calculated for you. Please don't be confused if that or such happens. Number F says provide the income tax expense of 80,000 rands for the year ended 31st December 2012. And I've been doing this through all the exercises that I've been doing with you. I think the past two exercises that I've done, that whenever you are given a tax expense, you must be able to check if have you done an overpayment of tax or underpayment of tax to SARS. Because a tax expense that is supposed to be paid is 80,000 rands. This is the amount that was supposed to be paid in terms of tax to SARS by the end of December in the year 2012. But in the trial balance, there was already provisional tax payment. That means a payment of tax that was made before the end of the year. And that SARS provisional tax payment was 60,000 rands. So now this was already paid. And if we paid 60,000 rands instead of paying 80,000 rands, it means obviously we have made a less payment as we thought we supposed to have paid SARS. So now that means we have to calculate a tax due or tax receivable to or from SARS. And when we calculate a tax due or tax receivable or payable to SARS, we have to say taxation expense. And we know that our taxation expense is 80,000 rands, which is the tax that was supposed to be paid. Then we say minus provisional payment. And our provisional payment is an amount of 60,000 rands, the one that comes from the trial balance. Therefore now it means 20,000 rands is the difference. And obviously now the difference will be tax payable to SARS, or you can say tax due to SARS, because whatever is due is the same as the name payable. So now this will be tax payable to SARS, because we owe SARS 20,000 rands according to our books. Tax payable to SARS. And the tax payable to SARS in this case will be 20,000 rands, because what we're supposed to have paid was 80,000 rands. And we only paid in the trial balance the 60,000 rands that you see there. So now that is why 20,000 rands is tax payable to SARS. So that is also very important to take into account with regard to the tax side on the close corporation. Therefore, now we have to go and record this 80,000 rands in the income statement, because I think I have already made a provision for that. Our taxation expense is 80,000 rands. Our taxation expense, it is 80,000 rands. So we have recorded the tax expense in the income statement. Number G says that Bentley and Bay have agreed that a member's distribution of 120,000 rands must be made in proportion to the member's interest, which must be credited against their interest-free loan. So now it means that 120,000 rands must be split according to the member's interest when it comes to the loan free between the close corporation and the members. So now when it comes to the loans, which is the members loan free, or the notes on a loan to members, this must be split based on the members' ratio. However, in the statement of changes in equity, we have to record the full 120,000 rands, reducing our retained earnings. That will be a distribution. We don't split anything here. We record the full amount of the distribution, which is 120,000 rands. We only split that when it comes to the loans, because members have different loans, but there's only one retained earnings where the amount is taken from. Then now we go to the next adjustment. Remember, this adjustment will still have to be recorded under the loans. So now let me just write the loans to members. So now this will affect, because we are instructed to credit this against the members' interest-free loan accounts. Then we have adjustment number H, which says provide for the interest expense payable on the loan from ABA Bank for the December 2012. 70,000 had been repaid on the mortgage loan on the 1st of January 2012. The next installment will take place on the 1st of January 2013. And I remember in the previous exercise, there was a same scenario where there was a payment that took place on the first day of the accounting period. And same again, in this case, we have 70,000 rands that was paid in the current year. And remember, the minute a payment took place in the beginning of the year, and it get to be recorded in the beginning of the year, it means the interest will be paid on the amount after the payment took place. So now it means the loan that we see in the trial balance already exclude the payment. The loan that we see, which is a loan of 600,000 rands, it is after the payment of 70,000 rands that we see under this adjustment. It is after this adjustment was taken into account. So now there's nothing to subtract and there's nothing to add, because it was already deducted on the 1st of January. And therefore now the business was owing the loan of 600,000 rands for the full accounting period. From 1st of January, the loan was 600,000 rands because 70,000 rands of the loan was already repaid. So now when we calculate the interest on that, we just say 600,000 rands times by 10%, and we realize that the interest on the loan is an amount of 60,000 rands. If we say the loan of 600,000 rands, we multiply this by 10%. Let me just do my workings here. The interest on a loan is 600,000 rands times by 10%. Then that will give us 60,000 rands. 600,000 rands being the loan times by 10%, that will give us 60,000 rands, which is the interest that was supposed to be paid. So now if that is the interest that was supposed to be paid, it means under the finance cost, under the total of the finance cost, we're supposed to record 60,000 rands. We're supposed to record 60,000 rands because this is the interest that was supposed to be paid. However, the cross corporation has paid only 55,000 rands. That means the difference between 60,000 rands and 55,000 rands will be an accrued interest expense of 5,000 rands. Therefore, now in brackets, we just add that 5,000 rands. So that when you say 55,000 rands plus 5,000 rands, we get the same 60,000 rands, which is the interest that was supposed to be paid by the end of the year on the loan from ABA Bank. Then we shall continue slowly with our adjustments. And the next adjustment is adjustment number I, where they tell us that the salaries paid to members include salaries for both Bentley and Bay. the members were paid an equal annual salary for the year. So now when it comes to salaries, we have already recorded salaries to members 300,000 rands. So the reason why they are telling us that the members were paid an equal amount of salaries, this is important because when we do transaction with the members, we record incomes and expenses that are between individual members and the close corporation. So now it means under the amount of the salaries, which in the trial balance is given to be 300,000 rands, we have to say divide by 2 so that we get 150,000 rands, which is a salary that was due to one member, so that we record this 150,000 rands under the transaction with members for each member. So now that is the importance of the word equally to members. Then now we have to record those salaries under the total because that is just an information telling us that there was no further adjustment, but our salaries will be 300,000 rands, which is 150,000 rands and 150,000 rands for each member. Then that gave us 300,000 rands. Then this one I will do, I've done this. I will do this entry in one video, combining all other videos. I just want to do one video for the members' interest. When the member sell his interest to the close corporation, I just want to do them separately so that you get to master only one aspect. So now after this has been done, we have covered all the adjustment. And if all the adjustments have been covered, it therefore means that we can come back to our income statement and we totalize all the expenses. 250,000 rands is the expense of wages, and we have to totalize any other expense. No other expenses are covered. So now we can just give the total of all the expenses that we have. All the expenses that we have, starting from 250,000 rands, 300,000 rands, 16,500, 51,500, 84,000 rands, and the last expense is 96,000 rands, which is the rent expense. So now after we have totalized all these expenses, preferably please draw a straight line there. Ignore the fact that my line is not straight, but my numbers are straight. They are correct. So now the total expenses will be 798,000 rands. 798,000 rands. So now from there we can get to the profit before finance cost, or profit before finance cost, although it was supposed to be operating profit. Then I will say 975,000 rands plus 61,000 rands, which is a profit on the disposal of an asset that we don't have to worry about, minus 798,000 rands. That will give us 238,000 rands. That will give us 238,000 rands. 238,000 rands. That is operating profit or profit before finance cost. Remember, in this case, we don't have investment income. If there was investment income, which is income on an interest from a loan to a member, or income on an investment that was to any company, then that will have to be included before finance cost. Then I will say minus our finance cost of 60,000 rands. And after we have subtracted our finance cost of 60,000 rands, that will give us 178,000 rands. And after we have accounted for that profit before tax, then we subtract our tax by 80,000 rands, and we say minus 80,000 rands, and that will give us an amount of 98,000 rands as the net profit. or profit for the period. And we know that this profit will have to go straight to the statement of changes in equity. It has to go straight to the statement of changes in equity. And in the statement of changes in equity, there we have profit for the period. Profit for the period being 98,000 rands. 98,000 rands is the profit for the period. Therefore, now let me complete this statement by recording all the opening balances. And if my memory serves me, we had a member's contribution of 700,000 rands, which has to be split to 70% and 30%. If I still remember, let us confirm that the member's interest was given to be, okay, sorry, is it 60:40? Sorry for that, just a different exercise. However, we still have that 700,000 rands as the members contribution. Yes, there is the members contribution 700,000 rands. So now let us split that 700,000 rands in the ratio of 60% is to 40%. So now we just say 700,000 rands times by 60%, which is the members share. Then the second member will be the same 700,000 rands times by 40%. And if we do so, it will be 700,000 rands times by 60%. That will give us 420,000 rands minus 700,000. That will give us 280,000 rands. Plus 420,000. That will be 700,000 rands. So now we know that Bentley shares 60% in the contribution, or is contributed 60% in that 700,000 rands. Therefore, now the share for that member will have to be 420,000 rands. So let me record that opening balance 420,000 rands, and the second one will be 280,000 rands opening balance. Revaluation is from the trial balance. We do have opening balance of the revaluation and the retained earnings, and the retained earnings opening balance is 450,000 rands, while revaluation reserve is 200,000 rands. So now 450 is retained earnings, 200,000 rands is revaluation reserves. So revaluation reserves opening balance is 200,000 rands, and retained earnings is 450,000 rands opening balance, and the total is 1,350,000 rands. So now we have covered that, and there was no transfer of any amount to the general reserve. There was no transfer of any amount to the general reserves. So we did account for the member contribution of 50,000 rands. We did account for the 300,000 rands of the revaluation reserve, and we did account for the distribution of profit of 120,000 rands, which we have recorded that as negative. So now let me just record the total. 420,000 rands plus 50,000 rands, that gave us 470,000 rands. 470,000 rands, and this will be 280,000 rands, and this will be 500,000 rands. Nothing here. Retained earnings is 428,000 rands, and this is 1,678,000 rands. Then that will be our statement of changes in equity, and I've recorded everything as accurate as possible. So now the last part that we have to do is to record a note. I think there was another note that was required for us. The members interest free loan, that was requirement number 1.6, where we were required to do members interest free loan and transaction with members after that. So let us check that. That was 1.6. 1.6 were required to do members interest free loan and transaction with the members. So now I will be doing that now. Then after I will close this question. So I will be starting with 1.6, and 1.6 is members interest free loan. And we have two members here, members interest free loan, and the members interest free loan is for two members, P3 and B. Then after the total, we have opening balance of the loans, and the opening balances of these loans are from the trial balance. And in the trial balance, we have 120,000 rands and 140,000 rands. So now we record them as they are: 120,000 rands and 140,000 rands. And the total is 260,000 rands. Then there was a distribution that was to be credited. Distribution credited. And the distribution was an amount of 120,000 rands, which had to be split using the members' interest of 60:40. That 120,000 rands was under number G. Number G, there was the distribution of 120, which must be split using the members' interest and be credited against their members' interest free loans. So that is where I am. So now in doing that, we have to say 120,000 rands times by 60% and 120,000 rands times by 40%. So let me show you those calculations now. So now in doing that, we just have to say 120,000 rands times by 60% for the first member, which is Bentley, and we say 120,000 rands times by 40% for the second member, which is B. So if we say 120,000 rands times by 60%, that gives us 72,000 rands. That means the portion of the loan that must be credited against the loan account of Bentley will be 72,000 rands, and 120,000 rands times by 40% will be 48,000 rands, which is the portion of the distribution that must be credited against the loan account of B. That is B, that is Bentley. So let us go and record these two under their loan accounts. Then obviously this has to reduce their loan accounts, because all these loans in the trial balance were recorded on the debit side. Remember, both of these loans were recorded on the debit side of the trial balance. There we had 120,000 rands of a loan free, and there was a members interest free loan to be 140,000 rands, and I highlighted that they are on the debit side of the trial balance. And the fact that a loan is on the debit side of the trial balance, it indicates that it's an asset in the close corporation. That means it's a loan that was given to a member. So now if it's a loan that was given to a member, that will mean that it's an asset in the close corporation. Therefore now the assets of the close corporation will be decreasing in this case. So by 72,000 rands, because the members, it's more like they are making a payment, and 48,000 rands. And the total will be 120,000 rands. Then after we are done with that, there was no repayment, there was no loan advance during the year, then we can just draw the line. Then we get to the closing balance of 48,000 rands and the closing balance of 92,000 rands, and the total will be 140,000 rands. So now those will be the closing balance on the 31st of December. Closing balance, that is 31st of December 2012. So now we are done with the recording of the members' interest-free loan accounts. Then we do transaction with the members. Transaction with the members, and we only had 2 members. Transaction with the members, which is Bentley, Ben3, then the next member is Bay, then we have the total. Please be able to write the sentence, just have it memorized somewhere in your mind, which says profit before tax. Profit before tax is shown after the following transaction with the members. After the following transaction with the members. Then this transaction with members, the first one is salaries. I think it's the only one that we have because there was no interest on the loans. Salaries that were between the close corporation and the members, it was 150,000 rands and 150,000 rands, and the total is 300,000 rands. And all these are negative. The 150,000 rands, remember, it came from the adjustment. There was adjustment that told us that the salaries were equal. There was equal amount of salaries to the members, which says an equal amount of salaries for the year. So now if the members we paid equal amount of salaries for the year, and the salaries that we paid to the members were 300,000 rands, then we just have to say 300,000 rands divided by 2, we get 150 for each member. So now with that being said, that was the only last entry to record under the transaction with the members. And on my side, that being said, thank you guys.